Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again at euro currency. So guys, as usual, prepared a weekly report, and this time we have taken a look at the balance between the European Central Bank and the Fed, because actually this is the cornerstone of the future performance of the euro currency. Depending on what steps will make the central banks, the rates of the euro depends almost on 100%. And we have come to, well, maybe a bit unexpected conclusion, at least unexpected for current market situation, because our arguments maybe are not obvious. So I think you will be interested with the reasons why we think so, that Fed actually could cut the rate for the 50 basis point once again. And we have 3-4 big reasons for that. Some of them are not widely announced by the big media. Particularly speaking, recent Fed member Barr, who has spoken recently about the new feature of the Fed and United States Treasury in utilizing of the bank reserves on the Fed accounts. So some other moments and events that have happened are not really widely discussed in media, and market mostly were standing on the recent PMI numbers and so on. Yes, they are important, but actually everybody already is expecting 25 base point cut from the European Central Bank in October. So this is not a surprise, and we can't use this argument as some driving power for the euro. Vice versa, we actually have to take a look at the Fed right now, especially because in October will be the pause and rate decision. So, and that makes really thrilling expectations possible on the dynamic of the euro currency, because this decision is not priced in and actually is not even discussed in the media right now. But we see the reasons for that decision. So if you're interested, you could read the report. By taking a look at the long-term technical instruments, so I would take a look first of all at the dollar index. If you take a look at the very long-term chart, which is actually I was watching for it in the recent few months and thinking about the situation. So this is 3 months and quarterly chart of the dollar index, and you can see obviously the bearish performance here is on top. First of all, it's great engulfing. As you know, engulfing usually takes the ABCD shape. And market right now is standing at this support area. I briefly mentioned already this 100-even area, but take a look on the dynamic in the last quarter. This is just hugely bearish. It's a very fast drop, almost tail closing, which is very important. And significantly increased chances on a possible breakout and return back in this range, which automatically means opening door for a 90-even support. So dollar could show the big weakness if this will happen. And overall background and performance here you could see mostly supportive to that. Also you could see the same story on a really long-term chart on a half and a year. Just one moment. 6-month chart. So take a look at the same picture, you could see what really has happened. But first of all, you could see this range where market stands historically, and here's the testing of this bottom, and take a look what's going on in the half-year chart, what we have in the recent half of the year. Big engulfing pattern. I would say it's almost a reversal, but market has not formed a new top on this half of the year. So, but this is very significant technical indicator, which is confirmed our fundamental conclusions. Yes, some extraordinary factors could intrude, such as big geopolitical escalation or something, but this is out of our control, so we could operate only with the news that and information that we have. And based on this information, as technical as fundamentally, it's really big chances that well, euro will show the strength, or better to say that the dollar will show the weakness in the nearest months. So if you read the report, you will understand better what I mean. Now, if we return back to our short-term situation, let's have a look what we have. On 10-year bonds, you could see minor reversal on yields, which is also supportive to the further euro currency appreciation. If it will last for a bit longer, it will be all the better. On euro currency futures, finally, we've got the grabber. So now this grabber you could see on all different contracts. So you could see this is December contract of the future on the euro currency, and if you even use the continuous futures, you will see that actually we have the same grabber has been formed. It suggests upward action. So this is the first point. Second point that now could be seen on all time frames, on all charts and retail brokers and the futures. This is the grabber on the fall time frame chart. This is another one that we have. So in fact, on the background, we have two grabbers on the bullish side, as on the daily and on the 4-hour time frame chart. So on the daily chart, it means that we still could keep in focus this target, which we already talked about, 112.50 approximately. Euro currency is trying to hold short-term bullish context because it's vitally related to the intraday support, which is market currently trying to hold. And it was able to do, and actually thanks to this, the short-term intraday and this upward tendency context is still valid. It has not been broken. On the fall time frame chart, that's the grabber that we have, and take a look on the response that market showing to the confidence support that we already have specified. If you remember, on Friday we said it would be better to wait and see what will happen because sell-off was really fast and market was at the edge of the bullish context right there. Friday action has brought us nothing because we've got the straightforward personal consumption expenditures release reaction and the same reaction in the opposite direction. So situation hasn't changed significantly. So in fact, on Monday, we will be at the same area where we were on Friday morning. So, but currently we have on the background two grabbers. One of them is on the fall time frame chart, another one on the daily. So as a result, we're coming to this picture that we have. What arguments exist on the position taken in the current situation? So I would say actually twofold. First, on the bearish side, we have even less arguments. So while we have the grabbers, personally, I do not want to take a short position. I already explained this on Friday because for the bearish position, it's not enough the context, not sufficient context. We need some breakout, some more bearish signs. Currently, we don't have it. Besides, major confidence area is still valid. On the bullish side, we have only two arguments. First is grabbers. Once again, second is relatively tight area where we could hide the stop. So risk of this trade will be very small. That's why actually you could decide what to do, whether we should take position here or not. Just on Monday, guys, one moment is that be aware of the opening because big events, political events has happened in the weekend. Those who read our channel on the Telegram knows about that. And Monday morning, it might be some surprise on the opening price. So demand for the dollar could increase, at least in the moment of the opening. Maybe later it will be corrected, but just be aware of this. Based on this time frame, my suggestion is maybe we could try to take the position, albeit with a bit decreased size of the position, with the stops below this area. So risk not very significant. On the bearish side, we do not have anything. That's why actually not really big options we have, big amount of options. Either do nothing once again and see what will happen, or dealing with the one that we have. So trying to take the position here with some tight stop, maybe with some decreased trading volume, and see what will happen. So that's just my suggestion and vision on the current situation. Think about this, decide, prepare your own trading plan, and let's see what will happen.